you guys have said a few times that asset location is more important than asset allocation. And I'm just, if
I
there's
don't know
any
if
way
more
you
As
can,
important.
as important, as important.
or as important. So could you just, I don't know if you can generically describe that, or if you need to hear where everything is or how I have it invested, but I just don't understand my tax implications, I guess, of what I'm doing.
So from a high level, anything that is withdrawn from an IRA, distributed from an IRA or 401k, not a Roth, but traditional, is taxed as ordinary income.
Either while you're living or at your death.
Yeah, taxed as ordinary income. So
To the recipient of that.
So let's say you owned a S&P 500 index fund. Any sort of dividends that they spin off, essentially because it's in the IRA, it's going to be taxed as ordinary income. And if you own some fixed income, you own treasuries, some other bonds, the interest on those are going to be taxed as ordinary income. Now, if things are held outside of an IRA, let's say in a brokerage account or just held in a direct treasury or something, those qualified dividends from your S&P 500 fund are going to be taxed at a favorable rate because they're called qualified dividends. They get a special tax. It's typically 15%. It'd be a little higher if higher income with Obamacare tax. But
And why are they qualified, Scott?
that's the way they made the rules.
Because corporation pay taxes on them once already.
Okay, well,
Well,
that was the argument at the time when they put that into. That's the rules that Congress created for us that we
that's correct.
live by. So it's qualified dividends are favorably taxed when they're outside the IRA, and then something like treasuries are not state tax. So if you live in a high tax state, they're exempt from state income taxes. And maybe if you own municipal bonds, for example, you can own municipal bonds. They're completely tax free. So everything being equal, which is not the case, but all things equal, you would want to have your fixed income inside of a retirement account and your growth equities outside of a retirement account.